Thank you so much for coming. Welcome to Freedom Federal Credit Union's Bel Air branch. It's so great to have you for our How to Buy a Home in 2023. Hopefully, you're going to get a lot out of this seminar, and we have some great presenters to help you walk through a very challenging, very changing environment for home buying, a lot different than it has been in the last few years. Just some housekeeping notes. If you need the restroom, it's behind the staircase over to your right. We have plenty of food, so please help yourself if you need any. We're going to have as much time as you need after the presentation for Q&A. So if you want, you can write them down and tear off a piece of paper and hand it to one of the people in the back, or you can feel free to stand up and ask questions. But we are here for as long as you need to ask whatever questions that you have. Also at the end, we have a $200 Amazon gift card as our door prize. So hopefully you'll be able to stick around and be present when that drawing happens. With that, I want to just introduce our speakers, Bob and Linda Rich from Rich & Rich Realty. We have Mike Ostrowski from Freedom Federal Credit Union, Justin Hoy from LTX Companies, and Justin Sapp from Certified Property Inspection. So they're going to walk you through the entire A to Z for home buying and the do's and don'ts and a whole lot of hopefully very valuable information to get you going. With that, Bob, I'll turn it over to you.
Okay, I don't know which slide is mine, sorry. Well, thank you, everyone, for coming out, and to Freedom Federal Credit Union for allowing us to do this. When we talked about doing this originally, one of the things that I think as a realtor that we see is knowing the process from, like I said, from beginning to end. So this seminar is set up in the format of how you would go through the process of buying a house. But we are here because of Freedom, and I'm super excited. I'm just curious, everybody here a member of Freedom? Okay, 5 years? Anybody 5 years or less? 10 years or less? 15? 50? 20 years? There you go. Awesome place. Really, really, they're amazing. I remember starting over in the festival before this building was even built. So good on them for doing what they're doing. So how to buy a home in 2023. It's a confusing time. We don't know what's going on. There's a lot of misinformation, a lot of stuff that you see on the news that isn't applicable to our market. It's like, oh, we're in a housing bubble. It's not. Very different depending on the market you're in. So is everybody here kind of a first-time home buyer? First-time home buyers? Second time? Mostly first-time home buyer, second time? Feel free to raise your hand throughout. Again, we are going to have Q&A at the end, so please feel free to let me know what you're looking for. So my first question that I put down here is, where do you start? Anybody looking online? That tends to be where everybody starts with a dream. Ooh, I'm tired of renting. My house is too small. My house is too big. Whatever it is, it starts with that dream of changing something. So you look online, and then you're like, what do I do? Whether it's new to you or it's been 10, 15 years since you've done the process, things have changed an awful lot. So you find a realtor, and you say, I want to see this house. It's my dream. It's perfect. It's everything that I want. I will squash you right away to let you know that most people don't buy the first 3 to 5 houses they look at. But what I'm going to ask pretty early on in our conversation is the 3 categories, standards that I have to, as a realtor, answer for my clients. Are you ready, willing, and able to buy a house? Ready and willing, everybody in here. Ready, willing. Able is where we always run into what could be the hiccup, because able is, do I have money? How do I get the money? Where do I go? Our part, we come in once you have the money and you know what is the comfortable kind of area where you want to spend. So Mike Ostrowski is coming up, and he is the Senior VP of Lending here at Freedom Federal Credit Union, and he's going to explain to you what it takes to be an able buyer. And then when he's finished, come back and tell you the next step in the process. Thanks.
Thanks, Bob. My name is Mike Ostrowski. I'm the Senior VP of Lending here at Freedom. Real quick background on myself, real quick. I started in real estate in 1978. So you do the math, 2023, 1978. The answer is he's really old. I've been involved in commercial real estate, residential real estate, been an agent lender now for over 30 years. Been involved in boom markets, bust markets, and stagnant markets. The one constant in all of that is that people are still buying homes and people are still selling homes. That's the constant throughout time, regardless of what market you're in. So one of the really important factors that wasn't around when I was first an agent back in the 80s is the pre-qualification process. What does that really mean? It means when you talk to Bob or another agent, you're going to them and you're telling them, I've talked to a lender, and that lender has told me, here's how much loan I can afford, which means here's how much house I can buy. That narrows down the search for you to affordability. Back in the day, you talk to a realtor, you go out, look at a lovely home, put a contract in, and then wait 45 days to find out from the lender if you were qualified for that house. It was totally backwards back in the day. Now we're doing it the right way. You know up front, you know where to go, and it's a much more efficient and from a stress standpoint, less stressful. So what we look at when we're looking at a financial situation for you is, are there any credit issues that we have to deal with? How much cash do you have to work with? You know, there are a lot of different programs out there, so the amount of cash that we need for down payment, closing cost, can vary depending upon the type of program you're in and if you're eligible for any kind of federal or state or county grants. How much house can you afford? Well, at the end of the pre-qualification process, you're going to know that. You'll know how much house you can afford. You're going to know what an estimated payment's going to be, how much cash you're going to need to get into the property. All of that's going to be discussed between you and your lender during that pre-qualification process. What will your monthly mortgage payment be? Again, that's part of that pre-qualification process. There should be no surprises by the time you're speaking with your realtor and looking at a specific price range. You should know exactly how much you're going to have to budget for that house. Okay? So again, one of the constants over time for the underwriting and pre-qualification process are the 4 C's. The 4 C's of underwriting. The collateral. To a lender, that's very important because the collateral, the house, is what secures that loan. Heaven forbid, sometime in the future, things go south and you can't afford to make the payments anymore. The lender needs to know, is that house going to be worth what you paid for it and what I lent to you if we have to go to foreclosure? Very important. If anybody was buying back in the early 2000s and 2008 hit, we know what happened in that market where housing values plummeted significantly and the value wasn't there. And a lot of lenders were stuck with what they call properties that were underwater. They had loans outstanding on those properties and the properties weren't worth what they paid for them. So how do we determine that? How much the house is worth? That's the appraisal process. That's where the lender has an appraiser go out and determine here's the market value for this particular property. We also need to know your capacity, and that's your ability to repay. Now, if I sat down and did a pre-qualification for everybody in the room, I'm going to come up with a lot of different answers as far as how much you can afford, because everybody's financial situation is different. Now, there's a real estate axiom that no 2 pieces of real estate are the same. Well, no 2 borrowers are the same. You can have people that work for the same company receiving the same pay. Their financial situations are going to be different. So we have to figure out your capacity. Based upon income and debts, how much can you afford? Credit, extremely important, always has been. Back in the day, credit reports were a subjective type of report that we got. An underwriter looked at it. It was not scored. It just showed your debts and whether they were paid on time or not. Now, you have a credit score associated with the history of your payments. When an underwriter's looking at a credit report, the best indicator they have of how you're going to make future payments on future debt is what you've done with past payments. So that's why credit is extremely important, always has been and always will be. And then we look at capital, available funds. How much money do you have to get into the property? How much for down payment? How much for the closing costs? And one of the things that I consistently do, especially with first-time buyers, is counsel them not to go to their max budget. Because there's going to be things that you're going to need to budget for with that house in terms of repairs. Something's going to happen within the first 5 years of that property, more than likely, and you need to be in a position where you can afford to make those repairs and keep that house in good condition. So I strongly recommend, if you're a first-time buyer, let's not max you out when you're buying capacity. Let's make the budget comfortable for you. So the 4 C's. And then it's about, okay, we know what we're talking about in terms of the 4 C's and what you can do. Which mortgage program is going to be the right fit for you? Again, we have a lot of different people in this room, and one mortgage is not going to fit, or one mortgage program is not going to fit everybody's personal scenario. So we have fixed rates versus adjustable rates. Now, rates have been really low for a long time. And when I bought my first house, I was at 13.5%. Yeah, now the rates are in the 6s and high 5s. So the fixed rates have been, for a very long time, very favorable. But as rates continue to climb, you may look at an adjustable rate. What's the circumstance under which an adjustable rate is going to make sense for you? And that may be something such as, well, I work for a company that will buy my house if they transfer me. Company buyout. So I don't care where the rate's going to be in 3 years, because my company moves me every 3 to 5 years. So I'll do an adjustable. I don't care if the rates adjust, because by the time they do, I'm on to my next house. You're in a situation with your income where you know you're going to be coming into a large sum of money, and you're going to put that money, the intention is to put that money down on the principal amount of the outstanding mortgage. So you're not concerned if the rate adjusts, because in a year, 2 years, 3 years, you're putting that sum of money down on that principal amount, lowering your overall payment, even if the rate adjusts upwards. So depending upon your situation, there could be a recommendation. Let's take a look at an adjustable rate versus that fixed rate mortgage. There are also the difference here, you have, see on the screen here, of government versus conventional loans. Sort of a little misnomer, because all loans have a tie to the federal government in one way or another. But the broad categories that we talk about are government loans such as VA, FHA, USDA versus the conventional loan. Depending upon which program you're looking at, down payments can vary, and insurance requirements, mortgage insurance requirements can vary as well, depending upon the program. For example, with a VA loan, anybody a veteran here? Okay, we have a couple in the room. So with VA, one of the beautiful things about that program is it's 100% financing. You don't have to put any money down. You can actually have the seller pay your closing costs. So for the cost of an appraisal and homeowner's insurance, you might be able to get into a house. Again, depends on the market you're in and whether it's a buyer's market, seller's market, as to how that seller is willing to help you. But it's a great program. If you're a veteran, highly recommend you take advantage of that. Go back. Thank you. FHA was originally designed for first-time buyers when it came out. That's who it was geared to, because conventional mortgages back in the day, you had to have 20% down. And that was a barrier for a lot of people buying homes. They didn't have the 20% down. So FHA was designed for those first-time buyers that didn't have a lot of cash. And they only required 10% down when the program first came out. And then they lowered the requirement to 5%, and now it's at 3.5%. So it's a really good program for the first-time buyers. USDA was a program developed to help develop rural areas. Now, no longer that restrictive. You still have to buy within a certain area defined by the program, but another good way to possibly get into your first home with little to no money down. Okay, next slide, please. Okay, thank you. So in trying to get pre-qualified, there's some documentation that we're going to need from you. We're going to ask for your pay stubs covering the most 30 days, and that's if you're a W-2 employee. We're going to ask for the last 2 years of your W-2s, and that's going to give us an indication of income. Okay. Also, job stability. When we look at the pay stubs and the W-2s, is it the same employer over that period of time, or have you switched employment? If you're self-employed, we're going to need tax returns for the past 2 years, and that's 2 full tax years. The returns that we need are simply the federal returns with all the schedules. We don't need the state portion, just the federal return. If you're receiving pension income or Social Security, we need statements for that as well. What we really try and do is give you credit for all the income you have coming into your pocket, okay? So we're going to ask those questions. Are you receiving Social Security? Are you receiving pension? Are there other sources of income you have that you may not consider traditional sources of income? Tell us about all that. Part-time income may be considered as well. We're also going to ask for the bank statements to show, again, getting back to that cash to get into the property. How much cash do you have for down payment and for closing costs? So we see the bank statements, we get an idea of how much you've got, okay? All right. Once we get all that information, we're then going to go ahead and believe everything you tell us. As a lender, I've never not believed anybody until we verified. Once we verified what you told us, then we believe what you told us. So we have to verify employment. We have to verify if you're currently renting. We have to verify rent payments with your landlord. It's interesting, if you have a current mortgage and you're looking to buy something else, your mortgage is going to be reported on your credit report. So when we pull credit, we're going to see the mortgage history. Rental payments, never seen them reported on a credit report. So we have to send out a verification of rent to the landlord. So if you're thinking about moving, you want to make sure that you're on good terms with your landlord, okay? Because what they tell us on that form is what we have to go by. There's no other way for us to document it. So we have to do verification of rent if you're currently renting. If you've made large deposits into your bank account within the past 30 to 60 days, that's going to be questioned. And I had a good friend of mine that was buying a home. He had some large deposits, and we got into a very lengthy philosophical discussion about how far back in time we needed to verify those large deposits. Why do we need to do that? Well, we need to make sure the seller has not financially induced you to buy their house. That they can't do. It has to be a fair transaction for all sides, sort of what they call an arm's length transaction. So we have to be able to verify where those large deposits are coming from. Recent credit inquiries on the credit report. And that's one of the last things that we see in the credit report is a list of inquiries you've made with other creditors in the past year or so. Why do we want to know that? Well, you're getting a mortgage from the lender. What other debts have you incurred that haven't shown up on the credit report? So those recent inquiries are something you're going to be questioned about. You talk to ABC. Did you take a loan out with ABC? If you did, please provide us with documentation as to what that is. What's the balance? What's the monthly payment? Because that all has to go into the calculation of debt-to-income ratios. Source of gift funds. So you may not have all the cash you need when we look at the bank statements, but you can get a gift from a family member to help you with the transaction, and that's very common and very acceptable. It just has to be documented. So we have to see that the donor has the funds to give you. We need to see a copy of the check, a copy of the deposit slip going into your account, an updated account statement from you showing those funds are there, as well as a gift form signed by the donor stating that this is going to be a gift from them to you for the purchase of real estate. Now, if you don't have 20% to put down, like most conventional mortgages in the day used to require 20%, they've gotten away from that. 5% down is the minimum that you need now for conventional mortgages. But if you don't have 20% to put down, you have to pay mortgage insurance. Mortgage insurance does not protect you as a borrower. It does nothing for you as the borrower. It protects the lender In the event you default on the house, we have to foreclose and we lose money selling the house on the open market. We file a claim with the mortgage insurance company, they make us whole. So I want to be real clear, because sometimes people are under the impression that mortgage insurance is a protection for them as the borrower. It's not. It doesn't do anything for you as a borrower. It's an added expense to the monthly payment that you pay to protect the lender. Depending upon which type of loan program you have, VA, FHA, USDA, they call it something a little bit different. And why do they do that? Because heaven forbid we be consistent and you'd understand exactly what you're being charged. They call it something slightly different with each of these programs. But the bottom line is, whether it's a funding fee, upfront mortgage insurance premium, whatever you want to call it, private mortgage insurance, it's all the same thing. It's mortgage insurance. And the consumer pays it one way or another, either in a monthly fee, in an add-on to the interest rate. Somewhere you're going to wind up paying the mortgage insurance if you're putting less than 20% down. Okay? So how do you avoid mortgage insurance? Well, you put 20% down. Or lenders have come up with some programs. They were very popular back in the 2000s, sort of went away, and now they're back again. And that's where you can do a first mortgage for 80%. So in the mortgage insurance world, it looks like you've got 20% to put down, but you don't. So you take out a second mortgage for 10, 15%, 5% to make up the difference of what you don't have to put down, as long as you've got at least 5% total to put down for the transaction. So a lot of times what will happen, and we do the comparison, we do run the scenario using one of the traditional methods where you're paying the mortgage insurance, and then we run the scenario side by side where you do 80% for the first, you do the second, and show you the payments. And in most cases, that first and second mortgage, avoiding the mortgage insurance will give you a lower total monthly payment. So it's one way to go ahead and avoid. The do's and don'ts. So we'd like you to keep your original pay stubs, bank statements, and the other important financial documents that you may need to get pre-qualified, okay? They can become dated. We like to have documents within the past 30 days, if not fresher than that if you've got them. If you're going to get gift funds, we need to know that, because there's documentation, again, that you have to start collecting and a form that has to be filled out by the donor. So it's good to know that you're getting gift funds. Let us know if there are any employment changes, such as a promotion, a transfer, whatever it may be, any change in your income we need to be aware of. And that goes from the time we do the pre-qualification right up to the time you go under contract with your agent. We need to know about those kind of things because it can affect what you can borrow. Had one gentleman who, we were doing the verification of employment, the employer told us he no longer worked there. We talked to him, he said, oh, well, I'm out on sabbatical. Well, sabbatical is usually used for a doctor or for a professor. He was neither. He gotten fired. So we need to know that, and we're going to find out. So any change, good or bad, we need to know about it. And any request we make for documentation or verification or clarification, please respond as quickly as you can. When you're looking for a home, time is of the essence, and when you're under contract, time is really of the essence. There are some hard deadlines in those contracts, and we need to meet those deadlines. The don'ts, please don't change jobs unless you tell us you're going to do that, so we can sort of advise you what that's going to mean for your buying capacity. Don't make any major purchases prior to settlement. Had a young lady buying her first condo. Okay, she was all excited about it. And the room store at the festival was having a sale. And if you got a credit card with them, you got an additional 10% off. So she was going to go over and furnish the condo during this great sale at the room store. Thankfully, her mother told her, call Mike and find out if this is going to be good or bad for you. It would have been very bad. Now, what she does after the fact, once she's in the condo, that's up to her. But we needed to know that up front and what she was planning to do, and thankfully she called us. So don't open up any new liabilities during the process, and then don't increase the ones that you currently have. What I like to say is, you pre-qualified at this level, doing what you've been doing, continue to do that. Don't change that pattern in your lifestyle. If you're going to make large deposits into the account, again, notify the loan officer that that's what you're going to do so that we can prepare for it and tell you what we're going to need. Okay? So at that point, you know exactly what you can afford, what the purchase price is going to be, the target market, the loan amount, the monthly payment, and cash needed to get into the home of your dreams. So with that, we then switch you back over to your agent to start searching. So, Bob?
Back, sorry. So, you're pre-approved. Yay, you're able. Now comes the fun part. This is where I get involved and where Linda and I take over in the process. And the first thing we're going to do is hopefully get you offline, at least from the People magazine of the real estate world. I won't say what the sites are, but as realtors, you should expect your realtor is going to set you up on an email campaign specific to your needs. I'm going to talk to you about that. Like Mike said, one of the big things is going to be, what's the price range? That's going to filter out a lot. Right now, we are in a very, very difficult market because of an inventory crisis. Inventory has been on the decline for 6 years, so it's not a bubble. It's going to take a long time to get out of this. So it's still a really good time to buy because all things being equal, the market should continue to increase. But what we want to do is we want to get you into this email campaign. Start looking at houses. What do you look for in a realtor? Well, experience, local, full-time. The market moves so quickly that if your realtor's not willing to get you out there that day or the next day, days on market right now are probably about 7. The good houses will go in the first weekend, really, really quickly. I see people smiling, And I see it happen all the time. So being able, you're still going to run into the market. So having a good realtor who's going to understand the market for you is going to be really, really important. Our job as your realtor is to be the conductor of the process. Because you have so many different entities that are involved in your buying process. Linda's going to come up in a minute to talk to you about contract, but I tell people all the time, our job as a realtor is to make sure that everybody's doing what they're supposed to be doing, when they're supposed to do it, per the terms of the contract. Really important. I get to do the fun part. I get to do the shopping side. Linda's going to explain the contract side to you in a moment. Once we have that email campaign, you call us, text, email, say, hey, I found a house, I want to go look at it. We're going to go out and we're going to look at that house. What's the story that the house tells you? One of the things that I think has made me a pretty good realtor and anybody who is worth their salt by listening to inspectors. Justin's in the back and he's going to tell you a little bit about the home inspection process, but I listen to them, I follow them around. So when we get to a house, I want to look for what's the story on the outside of the house. Very rarely is it different on the inside from the outside. What's the roof look like, etc. I personally don't like to show houses at night because if you're going to spend hundreds of thousands of dollars on something, you should at least see what the outside of it looks like. Can't tell what the roof looks like, anything like that. Getting a home inspector is better than getting Bob, but I'm going to help you out and at least get you to the next step. So the average buyer looks at about 12 homes. And I alluded earlier, the home buying process is interesting. It's very rare for somebody to buy the first 3 to 5 houses that they look at, just because it's like test driving a car. You don't know what your money's going to get you until you get out there shopping a little bit. The good part about that is as you go through the process and you find the right house, you'll probably have enough comparison in your own mind to know that, hey, you know what, this is in the right price range, or I'll get people going, no, they're asking way too much for this. And I don't even have to prompt them for that because of the process by going through. So it is not something that you're going to go out and find something immediately. I've been a realtor 6 years. We've done it 3 times that we've gotten somebody in the first 3 houses. Really, really, really rare. So it should be fun, and you should be prepared for that process, and you should enjoy it. If you're not, find another realtor. Another thing that I tell people about your realtor, Don't get lost in Google world. A lot of people will do that. They'll say, oh, I got a question. They'll go online and they'll get an answer. But then they got to get another answer. And then they probably got to get a third answer just to make sure that all of them agree with one another. And an hour and a half later, you finally got your answer. Reach out to your realtor. They'll probably be able to get you the answer right away. That's our job, is to be your expert in real estate. Whatever you do, I'm sure you do it very, very well because you're all here thinking about buying houses. So yay. And what we do is bring that to the table to be your experts as realtors. So drive by, look at the house, rip it apart. Never feel like you are inconveniencing the realtor, the lender, anybody. If you buy a house, we all get paid. We work for you. So make us work. Don't feel like it's, I hear it all the time. Oh, I don't want you to come out on the weekend. Why? That's my job. I'm happy to come out. So you go all through all of this, you're having fun, we find the right house, and you're super excited. So what do you do next? Well, you're going to have to write the offer. And that is a relatively complex process that Linda is going to explain to you because she's way better at it than I am. And so, Linda?
Hello. So Bob and I work together, and he is definitely the fun side. He's out there showing you property, getting you excited about the purchase, helping you figure out maybe what the right price is. Then it gets kind of serious because it comes to my side, and that's when we're going to fill out about 40 pages of paperwork, maybe 50, depending on how complicated your offer is. So let's talk about your offer. So we talked about, like, maybe you've been out with your realtor, you've looked at houses, and you have a good feeling for what the price is. Other things you might want to consider is how long has the house been on the market? Like Bob said, if it's been on the market for a few days, you're probably going to have to offer close to full price, if not more. If it's been sitting for a while, you have more flexibility. The other thing you want to think about is, I know Mike said you have some money sitting in a bank account you've saved for this purchase. Part of that money is going to be put up right away. It's called your earnest money deposit. That money is something that is held in a non-interest-bearing account, an escrow account at your title company. And what that money does is, well, first of all, you'll see it again when you go to closing. Okay, you don't lose that money, but it's telling the seller, hey, I'm serious about this house, and if for some reason I'm just goofing off, I'm losing that money. It's gone. It's yours. So you have to be very careful when you do these things because your offer does become a contract. Two things influence a seller: time and money. Okay, so we've talked somewhat about money. When you're putting together the offer, you have to think in terms of the seller. So maybe you don't have enough money. Like Mike said, maybe you're going to ask the seller to pay some of your closing costs. That's going to come off the top of the seller's net. So you have to consider, okay, am I really offering them full price? No, because I'm asking for $10,000 seller help. I'm actually asking them to take $10,000 off their net. The timing of inspections. What inspections? What inspections do I want? How soon am I going to get them done? How soon am I going to be able to close? Mike said, maybe it's 40 days. Maybe you've already done all the work with your lender and you can get it done sooner. Maybe you have a lease and you need to wait for that lease to expire and you can't settle for 60 days. That's something the seller is going to consider. It's not always about money. It's sometimes about time. And like I said, in a competitive market, when a house is priced right and it's desirable, it goes very quickly and you will see multiple offers. So your realtor will make a phone call to the listing agent and say, hey, I have somebody who's thinking about writing an offer on this house. What are you looking for? Seller might say, well, my person's military and is going to transfer in 3 months. They really need to live in that house for 2. Okay, now we know. A good realtor is going to make that phone call for you. And they're going to find out what is going to, an old friend of mine used to say this, crank the seller's tractor. It's not always about money. Sometimes it's about that time. Maybe the house needs a little bit of work and you're handy. Maybe you're not going to ask for every single thing that comes up because you already expect it. That's something we can sell. We can say, hey, my buyer is a plumber. He's not freaked out about the water issue. My buyer, she's an electrician. She's not worried about the aluminum wiring. Not worried at all. Those are things we can sell. That helps. These are the things that will make the offer stand out. Now, negotiable, things that are negotiable. Well, the purchase price. If you're asking for seller's help, you can always get a counter on that. This is interesting. Let's talk about this. In this market, this is what's happening. So let's say you find your dream home. Gotta have it. And I call, or Bob calls, or your realtor calls, and then you find out 5 offers are in hand. Seller's gonna review the offers tomorrow. And let's say your lender, Mike, for instance, says, well, you've saved up a lot of money. Maybe you could cover a gap if the house doesn't appraise, and you can offer more than the house is really worth. And you love it so much that you're like, okay, I am willing to give up $10,000 of my money if the house doesn't appraise. Say the house is worth $400,000. Appraisal comes in at $400,000, but you offered $410,000. If that seller is guaranteed $410,000 or $10,000 over the appraisal, that makes a difference in a competitive market. Something to consider. Other things that are negotiable. Settlement date, like I said, maybe the seller needs to move quickly, maybe the seller needs to live there a little bit longer. Are you willing to let the seller live there after you settle? They'll pay you rent, maybe they will. Maybe you'll say, seller, I'll give you a month for free. That might actually work for you. That might make your offer stand out. And inspections, like we said, being flexible about how many inspections you're going to ask for, how soon you're going to get them done. And I'm going to ask Justin Sapp, who is the owner of Certified Property Inspections, who is a fabulous inspector, to come up and talk to you about inspections, what types of inspections. When you sit down to make the offer, you're going to see an inspection addendum. It's going to have a list of all the inspections you could dream of. And you have to be able to choose which ones you want to use. You want to talk about that, Justin?
Hey, everybody. How we doing? I'm Justin with Certified Property Inspection, as proven by my name tag and my logo. So if any of you question me, see me after class. So did anybody pick up this little handy home buying guide? So if you will pull that out and flip it open, there's a little home inspection tab. It's, I don't know, about 7th down. And if you flip that little guy open, it talks about some of the things you may want to know about your inspector. You've never met me. You don't know if I'm any good at my job or not. I like to think I am, and the other guys on our team are, but you want to be sure about that. Your realtor, Bob or Linda, or maybe friends or family who have bought a house say, hey, I had a really great experience with my inspector, or they may say, don't call this guy. He missed all this stuff, and after we moved in, we had these problems, right? So when you're hiring your inspector, everyone's not created equally. So make sure you have the right guy or woman. Talk to them, interview them, call the office, ask to talk to the inspector, ask what they're going to do. You may be on the phone for a while, so set some time aside. So make sure you have a good inspector. On here, you'll notice the second bullet point mentions ASHI, the American Society of Home Inspectors. It's the oldest association of home inspectors. It's been around about 40 some odd years, and it's really a certification body for inspectors. Kind of validates that, hey, the folks that are certified through ASHI know what they're doing. They've gone through a vetting process and We've got to do a whole bunch of inspections to get certified. We've got to submit reports to them, and they kind of validate that these folks know what they're doing. So you're getting a really good home inspector. So that's one, but also someone you're comfortable with, that you feel like is going to be there for you and take care of you. So I just wanted to kind of point that out to you because I think there is some really good advice on here. At the bottom in the green box, if everybody sees that, it says, do I need to be there for the inspection? Yes, yes, yes. You're probably going to have to cut out of work early to go see some houses because Bob is going to find one for you that meets 3 bedrooms, has the wood-burning fireplace, it has the walkout basement, it's an end-of-group townhouse, it's exactly the criteria that you said, Bob, this is the house that I want, and he finds it. And he calls you and says, hey, we got to go see this house, it's going to go fast. And you talk to the boss and say, can I cut out at 3:30? I got to go see this house. That's going to happen in the showing process, and it's fun. You're out shopping with Bob, having a good time. We home inspectors also only inspect during daylight because we really want to see your house, right? And even if I started in daylight and you say, well, you're inside, what's the difference? The house looks different when there's not sun shining through the windows, right? So we want to be there during daylight. We really want you to be there. Now, my company, we don't work on Sundays. I spend Sundays at church and with my family. However you spend your Sundays, good on you, but it won't be with me at your home inspection. It will be Monday through Friday during daylight hours or Saturday mornings if you're lucky enough to get one of those spots. We want you to be there. How long is a home inspection going to take? Just throw out a guess. Guesses? You're spot on, yep. So 3 hours is about average. We inspected a 9,000 square foot house yesterday, and there were 4 of us, and it took 3.5 hours because it's a really big house. But the normal house that I live in, that you guys are gonna buy, is probably gonna take 2 to 3 hours, maybe a little less, maybe a little more. You wanna set that time aside. Now it can get a little boring walking around watching the inspector do all the inspector man things, but you wanna be there, you wanna ask the questions, because it's more than us just making sure that you don't make a bad investment, right? We don't want you to buy a lemon. We don't want you to buy a money pit, right? These are terms that folks use. So we really want to avoid that. But we also want to, one day you're going to sit at a settlement table with Justin, our title guy back here, and he's going to hand you keys to this house. And from then on, you own the house. And you're going to leave that settlement, you're going to go to that house, and oh man, now I own this house, right? So we want to make sure that you're comfortable and that you know that house inside and out. Where's the water shut off? Where's the gas shut off? Where at freezing temperatures tonight, I got to turn the hose off for outside. You know, where is that? What size filter? How do I change the filter in the HVAC system? Does my HVAC system have a filter? All of these things are really relevant to being at the inspection to understand. Again, we want to make sure that there's no big problems with the house first and foremost. No big mechanical, structural issues, or safety concerns. Little side note, today I prevented a house from burning down, literally, and I can show you the pictures afterwards. Ironically, it would have been due to a smoke detector. I was inspecting a house this morning, and I saw a flicker behind the smoke detector. So I detached the smoke detector, and the harness that plugs in was scorched. So I unplugged it, and I said, hey guys, I'm gonna leave this unplugged. Well, then the harness started sparking, and I went to the panel and shut the breaker off and said, hey, we need to call the folks who live here and let them know they got a problem, this needs to get taken care of. Now that super exciting story doesn't happen every day. It's happened a couple of times, but it doesn't happen every day. So we want to avoid those problems for sure, but we also want to figure out, hey, you need some caulking around the windows. You don't need to worry about it now, but come spring, you get a nice day, go to Home Depot, get some decent silicone caulk and go take care of this. And you know, those little maintenance things that aren't big problems with the house. It's not something you're going to ask to be repaired, but it's your to-do list, right? Because you own it, you want to protect this investment that you've got. So being at the inspection is absolutely critical. We really encourage it. Now, we'll do your inspection if you're not there, and we'll send you an awesome report with a bunch of pictures, and you're going to love it. But we really want to talk through that stuff with you and answer the questions that you have. Now, if you are out of town or you're buying a house in a different area, we do Zoom calls sometimes. If Bob has a client who's relocating from San Antonio to Harford County, and we'll do a Zoom call at the inspection to explain it to him. But again, we really like you to be there. The second thing I'll say about that is a good inspector is going to be a resource for you after the fact. As well, a good realtor. If you have a problem with the house down the road and you need something fixed, or you're just addressing the things that we found, hey, I want to take care of this, do you have a good person we can call? We certainly can help with that. They're a great resource for folks that you may need, but also stuff that you're tackling on your own. Hey, I'm going to take care of this thing, and you know, I remember you were saying about that, but what should I do again? and we're happy to kind of talk you through that. So a good inspector is going to want you there the day of. If you call an inspection company other than ours, I have no idea why you would do that. But let's just say for the sake of argument, you did. And they say, hey, the appointment's at 9, why don't you come at 10:30 and we'll just kind of review things toward the end. Call somebody else. If you call and say, hey, I can't get there till 10, is it okay? And we say, are you sure you can't get there at 9? I mean, we'll start and we'll get you caught up, but we really like you. That's the inspection company that you want to work with. Everybody cool with that? Is that fair? All right. I have no idea what's on the slides. They're probably awesome. I think I wrote them. Let's check it out. Don't invite 90. So you're going to be there. Everybody agree you're going to be at the inspection? Everybody cool with that? Cool. Don't invite 97 family members. Do you know why? Because we want your attention. We want to work with you through the inspection, talk to you about the house, let you know what's going on. And if you have Aunt Sue and Uncle Jim, oh, look at this, and yeah, well, you can put the couch over here. I mean, that stuff is fine. There's going to be time for that. We're going to be there for a while. So you'll have time. You'll have time to do the video and, show the out-of-town family. But we really want your attention there. Let's see what else you shouldn't do. Having the painting, the flooring guy, the fence guy, the pool guy, all there for quotes because you're going to redo stuff. We're getting new carpet, and this guy's coming. Again, it's really, hey, you can schedule those appointments another time. And if you do it, that's okay with us, but we'd rather you not because, again, we really want to spend that time with you. You should attend the inspection. I think we covered that one. And you should walk around with us. Now, you don't have to the whole time. There's parts of the inspection that are super exciting, in my opinion, like the smoke detector thing. There are parts of the inspection where I absolutely will not let you accompany me, like the roof. Anybody want to get on the roof with me? Even if you do, I'm still not going to say no. You bring your own ladder, you get on the roof all you want. But if you want to climb mine, my insurance says no. But I'm going to take a whole bunch of pictures, and I'm going to tell you all about it. So anywhere that we don't want you to go, which is basically the roof and the attic, anywhere we've got to climb and then get back down. If there's a crawl space, you're welcome to get in with us. I've never had anybody yet say they wanted to go with me, but you can. In which case, please go first to get all the spider webs out of the way. But otherwise, when we're walking around the house, yeah, it can get a little redundant room to room, one bedroom to the next. There's not a whole lot different, but we want you to be there. We want to talk about it. We want to show you what's going on. And this is a big one. Read your entire report. Now, we're going to give you a summary page, which is going to be bullet pointed and color coded and super slick, and you can kind of cruise right down through that and go, all right, I know the house. But there's probably 100 photos in there that really kind of explore what we're talking about and the issues that you've got and that sort of thing. So take the time to review that, really read through it, and save it. I bought the house that I'm in 9 years ago, and I still have the inspection report. Thankfully, I looked at it about 6 months ago, and I did take care of all the things that were on the list. But hang on to it, because it's a great resource for you. So we talked about the home inspection. The last, 35 minutes of me yapping was basically about your home inspection, which is really important. Now, you might be buying a house where you need more than a home inspection. You might be borrowing money in such a way that the lender wants you to do some additional inspections. You might live in a part of the country where some inspections are warranted based on some environmental concerns. So some of those things could be a radon test. Anybody ever heard the word radon before? It's the earth trying to kill us. When people ask me what's radon, we've been trying to kill it, it's fighting back. It's a naturally occurring radioactive gas, and it can seep up and be an elevated gas inside the house. And the EPA says it's potentially dangerous long term. We don't have to tear the house down. We can mitigate it. It's actually relatively inexpensive to take care of that problem, but knowing that might be something that you want to know about your house. You may be buying a house that way, and it may have a well and septic, as opposed to in town where you're connected to public water and sewer. A septic is probably the most expensive component of a home. It's more expensive than your roof. It's more expensive than the air conditioning. It's a really expensive thing, and you want to make sure if you're buying a house with a septic system that it's working the way it's supposed to. Who likes when you turn on the faucet and water comes out? I like that too. If you're buying a house with a well, we want to make sure that that's going to happen for you. We also want to know what's in the water, so we can take samples in fancy little bottles and take it to a lab to have it tested to make sure that it's safe to drink. Who wants a wood-burning fireplace? Whose dream is, I love the wood-burning fireplace. I know, me too. It's a pain, honestly, but I love it. It's awesome. Family over, Thanksgiving sort of deal. You're having an open fire inside of your house. That's not a joke. You want to make sure that it's safe. Now, it can be safe, and it's awesome. But a chimney inspection may be appropriate. Now, maybe you're never going to use that wood-burning fireplace. You're just going to put the little candles in it, HGTV style, and that's cool. So again, there's a lot of different things that you may or may not need to do. My job is not to upsell you. You guys are paying us a lot of money already to be there, but we do want to make sure that you're protected, your investment's protected, and your family is safe. So making sure that we do the right things for you is really the goal there. I think, is that the last inspection slide? It probably is. All right, cool. So I'm going to turn it back over to Linda, and she's going to give us the weather forecast for this weekend. Linda?
Okay, we're on the end of our journey. So, we've written the offer, we've called the listing agent, we've given them the perfect scenario why they should accept our offer, and they've accepted it. What happens next? So we give you a call, your realtor calls you and says, congratulations, your offer's been accepted. Now, two things have to happen. I have to send, or your realtor needs to send that contract to you, to the title company, and to your lender. Your responsibility is going to be to contact the lender and start the process of the loan, and to wire your EMD, your earnest money deposit, to the title company. Off the bat. Next, we're going to have to schedule your home inspections. Like I said earlier, everything has a time frame. So you have a certain number of days to get your loan application taken care of and to get a loan commitment. You have a certain number of days to turn in your EMD, usually it's 1 or 2 days. And you have a certain number of days to get your inspection done and to have the request for repairs submitted. Okay, so that 7 days that you had, we had to make it the best offer, so we said, we're gonna get everything done in 3 days. Well, that means all your inspections and your request for repairs is sent within that time frame. Your lender is also going to ask for an appraisal, and they don't get to choose the appraiser, okay? It's basically a hopper, right? They say, oh, this loan needs, we need an appraisal now. The appraiser is going to call the listing agent, not me, not you, but the listing agent, and they're going to arrange a time for the appraisal. Now, a good listing agent will go to the appraisal and sell it to the appraiser and say, this is why this house is worth this dollar amount. Now, if the appraisal comes back and the value is met and there are no repairs that need to be made per the appraisal, I won't hear about it. Your realtor will not hear about it. You will get a copy of it. Your lender will get a copy of it. Your realtor will call the lender and say, hey, didn't hear anything about the appraisal. Are we good? Yes, we're good. What happens if we're not good? Now we've got to go back to the drawing board and say, okay, we didn't meet the value. We need to renegotiate the price. Seller, are you willing to come down to the price that it appraised for? Or maybe that's money you have to come to the table with if you agreed to the appraisal gap. And your other job is going to be to review HOA or condo docs if you're buying into a neighborhood with HOA condo. If you are purchasing a home in an HOA or condo neighborhood, please let your realtor know ahead of time if you have any restrictions. Because when those condo or HOA documents are given to you, you're going to have a few days to read them and decide whether or not you can live by their rules, okay? Things that will influence that, and this will come up, and if your realtor knows that, say, you own your own plumbing company and you have a big commercial vehicle, okay? Is that vehicle going to be allowed in the neighborhood? Some neighborhoods won't allow it. Some neighborhoods will not allow a shed. Some neighborhoods have restrictions for pets. I had somebody years ago, now I've been a real estate agent for 16 years, but I had somebody a long time ago say, I have pretty chickens, they're my pets, and I need to have them. Now, you laugh, but that's actually a thing, and in the older neighborhoods, if the HOA is still active, they will say no poultry, no agricultural animals, it's a thing. So it took us a while, but she ended up buying a cute little rancher in Falston that allowed it. Maybe you need a fence, and it has to be a certain kind of fence that you're sold on. HOAs will tell you what material that fence can be. Maybe you are a boating enthusiast or you love your camper and will never sell it. Where are you going to park it? Will the HOA allow that? Maybe you have a member of five family members in your house. Can you have 5 cars in your driveway or on the road? These are all things to consider when you're looking for the house, because at the time the HOA and condo docs are given to you, you're expected to read them. And if you move into the house and you didn't read those and you find that the rule isn't going to work for you, it's too late. So let your realtor know. Now, the inspection, the appraisal, your loans processing, everything's wonderful. What is the title company doing for you? Justin Hoy is the VP of LTX Companies, and he is an attorney. I love when he's sitting at my settlement table, because when something comes up, he's able to write something up right there. I'm not an attorney. I can't write up an addendum or a legal document, but there he is sitting there, ready and able to do it.
So, good evening, everyone. As Linda said, my name is Justin Hoy, and I'm the Vice President of Operations at LTX Companies, and I am also a lawyer. I guess to start with, what is a title company and what do we do? So a title company typically works on the back end, and you don't hear a whole lot from us as on the buyer side until we're actually sitting at the settlement table. But what we're doing on the back end is that we're making sure that you actually own your property. So we've got abstractors that conduct a search of the land records and the public records to make sure that there are no liens or encumbrances that could affect your right, title, and interest in this property. Right? 'Cause, you know, you're spending a lot of money. You want to make sure that you own it free and clear outside of the normal easements and things for your gas and your electric, things like that. Okay. Some of the other things that the title company does is we're working in concert behind the scenes with your lender. We're we're putting the numbers together to make sure that everything is right, that all of your closing costs are correct, so that when you get to the settlement table, all of the money is handled. What we're also doing is we are the person at the settlement table. So if you're with my title company, I'm the one who's sitting at the settlement table going through all of the documents. It's a litany of documents, typically about that thick. That is a bunch of legalese, and I'm helping explain to you to make sure you understand what it is that you are signing. And the last and most important thing that I think that we do is we are the ones that handle the money. So all of the money, the lender's money comes through the title company office. Your money for your down payment and your closing costs comes to the title company. So that leads into what should you be looking for when you're evaluating title companies. You want somebody local, you want somebody reputable, but you also want a title company that is attorney driven. So you do not have to be a lawyer to own a title company in the state of Maryland. The difference between a lawyer-driven title company and a regular title company, as Linda said, besides being able to draft documents at the table, is my escrow account is governed by the Maryland State Bar. If there's any discrepancies in my escrow account, which is your money, I lose my license to practice law, and I spent a lot of money on that. So that's not necessarily worth putting up. Okay. The other thing that the title company does is the title company offers what is called title insurance. Okay, title insurance is a one-time premium that's paid at the time of closing. What that means is you're not going to get a recurring bill. It's not like your homeowner's insurance that you're paying for it annually. It's a one-time premium, and the premiums are regulated by the state of Maryland. Most lenders require it as a condition of closing, so they're going to be purchasing you're going to be purchasing a lender's policy of title insurance, which protects them, but you also need an owner's policy of title insurance, which protects you. Some of the things that it covers, and the most important one, is for any potential claims that you have that would be covered under the policy, it pays for a lawyer to defend them. So it covers the attorney's fees, which that alone is a significant savings to you. Some of the examples I usually give, it covers if there were forgeries in the chain of title, if somebody signed a deed under duress, if there were unrecorded easements or right-of-ways that run right through your property that nobody could have known about, but somebody comes forward and says, I've got the rights to go through this property and use this, your title policy would cover that. And then it covers any liens or encumbrances that could affect your use and enjoyment of the property. You know, as I talked about, the abstractor is going through and trying to make sure that all of those are covered, but your title policy covers you in case one was missed. Okay. So then we get into your closing costs. So you're sitting down, you're going 3 days before you go to closing, your lender is going to issue you your initial closing disclosure, which is going to give you a breakdown of all of the costs and fees that are associated with this transaction. Right? Your lender's got fees and costs that are associated, you know, their origination fee, the appraisal costs, the cost for your credit report, things like that. Title company's going to have fees and costs that are associated with that transaction, the cost of the abstract, the settlement fee, your owners and lenders policies, the title insurance, things like that. Then you're going to have your government fees, your transfer and recordation taxes, which vary from county to county, typically between 1% to 2% of the purchase price. You get discounts on certain things if you're going to own or occupy the property in some counties, and if you're a first-time home buyer. First-time home buyers in the state of Maryland, your portion of the state transfer tax is eliminated. So it's a one-time thing. Then there's other costs that go in, or fees and costs that go into it. So you're going to have a portion of your closing costs to establish your escrow accounts. So those accounts that the lender puts in place to pay your taxes and your homeowner's insurance going forward. You're going to be paying your homeowner's insurance for the first year. All of those things make up the closing disclosure, which shows you it's the story of the financial transaction, the financial picture of this transaction. So it's going to show you how much your closing costs are, the amount of money that you ultimately need to send to the title company to close on this transaction. While I'm talking about sending money to the title company, one of the things that I always touch on is wire fraud is a very real thing. There are many people out there that are spoofing wire instructions that get sent out, and they're getting you to send money to the wrong person. And it's immediately going overseas. So what I always suggest is when you get your wire instructions to send your earnest money deposit and you send your closing costs, make sure that you call and verify with the title company that they are in fact legitimate. Okay? The way that I tell you to do that is don't trust the phone number that is on the wire instructions, because every set of wire instructions has a phone number on there. Go to the company's website, look for their phone number on the company website, call that number and verify. And then what do I need to bring to closing? So from the buyer perspective, you need to make sure that you've got an approved photo identification so I can make sure you are who you say you are. And then you need to confirm with your settlement agent in which form any money you owe should be submitted. 99% of title companies now, for any significant amount, anything over $1,000, $2,000, are requiring it by wire transfer. Then I think we are back to Bob.
Thank you all for being so attentive. People taking notes and everything like that. You should know that recently we had a settlement and a repair wasn't done. So what we're talking about now is the final day, the nervous day, the day you've taken off from work, you're all excited because you're going to buy a house. It's a great day. What are you going to do prior to settlement? Well, we're going to have a walkthrough the day of. I don't like to do it the day before. We like to do it an hour before you settle, because that is your last opportunity to look at the house to make sure that the repairs that you negotiated for were done. Some mover hasn't put a couch through the wall. That the house is in the condition that you expect it to be in. This is not something you bring a tape measure to and say, oh, my couch is going to go here. I'm so excited. Bring the tape measure afterward. This is really to go through and make sure that the house is in the condition you expect it to be. We ran into a situation where there was a sauna in the house. Well, the little heater thing wasn't working. So because we had a lawyer sitting at the settlement, he was able to type up something right then and there, hold money in escrow to hold the seller's feet to the fire to make sure the repair was done. If the seller didn't do the repair, the money was there and the buyer could get the job done. We were able to continue, the person was able to buy the house. We've had other situations where you have not an attorney there, a notary or something like that, and they can't do that. You're spending hours on the phone trying to figure things out, and sometimes things get delayed. So having the right title company really is very important. You're going to want to change your utilities. Really important. You want to call BGE. Water, you don't have to worry about. Title is going to take care of water for you. That'll all be worked out. But BGE, if it gets turned off, they're going to charge you to turn it back on. And the seller is going to be like, nope, I'm ready to go. So make sure that you do that. And, again, what do you do if it isn't good? What if there is a hole in the wall? You can delay settlement. You can say this is not appropriate. Again, having the right person who's going to be able to make sure that you can get through there and hold what is agreeable to everybody is going to make sure that that process goes smoothly. Then the best thing of all, carpal tunnel syndrome. You're all going to get it. Because signing an offer when you have a loan to it, a lot of stuff, it's a lot of lender documents. You're asking somebody for hundreds of thousands of dollars. It's not unreasonable for them to want to make sure that they are protected. So you're going to be signing and signing and signing. If you're the seller, you don't sign nearly as much. It's very easy for the seller. And if anybody's looking to sell, realtors aren't just the buyer side. Realtors work for sellers and they work for buyers. Just want to make sure you all know that. But then you sign the paperwork, and if we help you, you get a nice, pretty package with some keys slid across the table to you as a thank you, because what an amazing thing to invite anybody into the process of buying a home. It is remarkable to watch. I remember buying my first house. For all you first-time home buyers out there, I didn't think I was adult enough to make a decision like that. It blew my mind that I was buying a house. So embrace and enjoy the process, because it really is a wonderful, wonderful process. It can be very stressful. A good realtor will make it as stress-free as possible. It will not be stress-free. Sorry, won't be. So that in a nutshell, hour and 5-minute nutshell, is the home buying process. And I really want to thank you all for coming out here. It's really been a pleasure to talk to you about the process and to see all the notes you were taking. Thank you so much.